If you have question, you mute yourself and ask your question first. On structure mostly. Now let's take for example. I know someone have asked me a question: how to know a real BMS. How to know a real BMS. Now take for example. Now we said we have our structure, major structure. We have our major structure on higher time frame. A lower low. Let's move yourself. So we have our lower low. Our lower low. Okay. We have our lower low, our lower high, and our lower low. Let's take, for example, this is daily time frame. Daily time frame. Daily time frame structure. Okay, this is the time frame structure. Okay. Okay. A minute. Okay, let's continue. Now let's take, for example, this is daily time frame structure. Then on let's take, for example, on H4. On H4, we have a structure range here, a lower low, a lower high, a lower low, which is internal structure. Lower high, lower low. Okay, let's take, for example, this is 1 hour time frame structure. Our higher time frame structure is down, daily time frame structure. Now, as we broke this low, our lower low, a BMS to the downside. A BMS to the downside. So since once market break this low, break this area, this BMS to the downside here. Once market give us this break of structure here. Once market give us this break of structure. Now, anything else market creates below this area. Anything creates below this area is our what range structure. Anything creates below this area is our what range structure. Is our range structure, ST structure. Anything created below this area is our range structure. So after market now create this range structure, we do expect market now to come higher to create a little lower low, a higher high, a BMS to the upside, higher low, a little structure range around this area to what? To give us what? A cell around this area, a continuation of cell. From here, based on internal structure within this within the zone. Within the zone, the last area of what where market mitigate last. So this is the high of the internal structure. So if market now come, market can use this area. Market can use this area to continue selling. Then why all these things that happen here is what? A range structure. Why all these things that happen here is what? A range structure. So market only gave us a little BMS to the upside here. A what? A little BMS to the upside. This M break of structure here. This M break of structure here. This is a question that someone asked me in my DM. That's what I'm trying to answer now. This break of structure here simply shows, note around this area. This area is full mitigation. So we talk about mitigation and all. We learn about all and everything. Now, this area is minor break of structure. So as market give us this minor break of structure, this area is what? Internal structure continuation. If you notice from the inside range, market was creating lower low, lower high, lower low, lower high, which is in the inside range. That is the internal structure. Internal structure within a range, a major range. All this internal structure on lower time frame, there might be what? A major range based on that time frame. But based on this daily time frame we are following, they are not major range. They are internal. They are within this swing low to this swing high. So they are internal structure. That is how we do what consider structure. Now, at this area, when market is doing this, we do expect market now to what give us what a little short uptrend here to run into this zone before creating a lower low. Before creating a lower low. So when market break this low, we do consider it what a lower low. We do consider it a what a lower low. So now market now use this as what a short a shallow corrective wave. This is what we call a shallow corrective wave. This little buy move here is what we call a shallow corrective wave, according to what we learned so far. So since this is a little shallow corrective wave, firstly, before we define it as what a main structure, at least it's either it has what a sharp rejection, that is a strong rejection, or mostly it has characteristics of what major liquidity. It has what characteristics of what major liquidity. A stop hunting or a stop hunt. A stop hunt means when it creates what something like double top around this high area before hunting it with this high and creating a low. So this is what we call a stop hunt. A stop hunt. A stop hunt. This is clear stop hunt. So market now stop hunted that very high before selling. Or if this thing did not create at this high, market created a stop hunt before buying. A lower low, lower, a double top here, then create a lower low, then give a little minor break of structure here. So you have a stop hunt here. We have what a stop hunt here, like a double bottom, So these are and some of those are other things that we mentioned, a stop hunting, liquidity graph, and all those stuffs. So these are the major examples to show that market is now what still ready to sell. Then this one will become now you will not call it shallow corrective wave any longer. You will call it what a main structure. So you will call it what a main structure. So if market now break this high, that means you have what gotten what a break of structure to the upside. So you have to consider what is happening on higher time frame before you come to lower time frame to be what trading in line with it based on structure. Now when we going deeper into liquidity, you understand all those little lower intraday fake break of structure. So that is that. So you have to understand what market is doing on higher time frame. So now another thing is this. Now let's take for example. Okay, now let's take for example around this area. I know break of structure. Let's keep this aside. Around this area, you understand that market was making a lower low. So after market now get to this very point, created a lower low, a lower high. Now, when market do this, we expect market now to create a lower low to run back into what? Into the first zone, either the first zone, which we will learn later about our point of interest, to run upper level before selling again. So once market break this high, this means we have gotten what we call a minor break of structure. This means we have gotten a minor break of structure. That means market broke internal structure. So once market broke internal structure, that means market is ready to clear 90% of the structure that is around this area. Apart from the area of our point of interest, which we will learn about later. So that means market is ready to give what a deep corrective wave without shallow corrective wave. Is only what deep. So that means market is ready to give only deep corrective wave. That means market is ready to give only deep corrective wave. Sorry. That means market is ready to what? Give only deep corrective wave, either running to SC, that is our sponsored candle. That is our sponsored candle, which is almost like supply and demand zone. Which is almost like what a supply and demand zone. So, but we talk about supply later. Now, this is a high, a major high, higher time frame high. So market now broke in intraday or lower time frame range structure. This is daily. On this daily, we are on downtrend. But on 1 hour time frame, there's still lower or little structure within it, within that zone. So market now broke this high to show that this is what we call a minor break of structure. So after this minor break of structure, we expect market now to what give us what a corrective wave to the downside. A corrective wave to the downside. But this does not mean that we are bullish now, that because it broke minor break of structure, that we are expecting market to break this high. No. We are only expecting market now to give us what a retracement to this level before selling again to create a lower low. To create what? A lower low. So this is your normal idea of structure. So when market do this, that means market did not give us what initial corrective wave, where you will be able to be defining and other stuff. But if market now do this, if market do this, that means this area is your what internal structure continuation. So you are not expecting this again. You only expect market now, boom, then create a lower low. So whereby you what define this high to know if it's a what a strong rejection or characteristics of a major liquidity, so that you will be able to define that this is now a lower low and this is a real lower high. If market break it, that means you are what to the upside. So another point is how we do use this thing again, how to understand our main BMS and fake BMS is this. Now, another point is this. Okay. Now, another point is this. Now, let's take, for example, market is making a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, a higher high. Now, as market has given us a higher high, another thing is understanding your point of interest. In this mentorship, we don't pick a point of interest necessarily. I'll be picking up to 5 points of interest or up to 3 points of interest. Our point of interest is either 1 or 2. We don't pick more than that. So if market is coming down, you know where market is coming to. If it's buying, you know where it's going to. So we don't pick point of interest anyhow. We have what our defined point of what interest. So if market now, let's take for example, market is coming down, you know that this area is where it's coming to. Another example how to know that market has given us what a break of structure is this. Now you wait for market at your point of what interest, at that valid point of interest, that valid point of interest. So as market run into that point of interest on lower time frame, now let's take for example, market give us this BMS on this higher time frame on daily time frame. On daily time frame. So as market has now given us what a break of structure to the upside. A break of structure to the upside. Now you're expecting market now to retrace as what corrective wave. Since we are in uptrend, you're expecting market to retrace down since you are in uptrend. So as market is coming down to this area, what you should expect is market creating a lower and lower high, lower and lower high based on liquidity and all, based on idea of liquidity and all. So as market get to your point of interest, your value point of interest, now after hunting a little liquidity around that area, you will wait for a minor BMS around that area. Then you can what trade in line with it. This is normal idea of structure. This is normal idea of structure. This is normal idea. So you wait for what a confirmation on lower time frame or on intraday time frame. Let's take for example, this is H4 structure. This is H4 structure. So since this is H4 structure, you have to what wait for what intraday time frame structure. You have what to wait for intraday time frame structure break or structure. So if let's say this is H4, you go to M15 or M5 for what confirmation before you take your entry. But those are what intraday time frame that you can use to what define intraday setups. Those are intraday time frame. So you wait for market now at this very point of interest before a buy. These are the normal basic stuffs of SMC. These are normal basic stuffs from SMC. Other people do this. So these are the things that at least you have to what have idea of it first. You have to what have the idea of it first. So and understand our idea of internal structure. its internal structure is different from range structure. Internal structure is different from range structure. Then why market, as market is giving this corrective wave, as market is giving us this corrective wave, we call this corrective wave a what? A minor structure. Why, as market is buying, we call those structure that market is using to buy internal structure. The reason why we call this this sell move here a minor structure is that since we know that our general idea is uptrend, we are always seeking to what take out external liquidity. So if we are buying at this area, we always seek to join. Places we look to join, areas we look to join, places we look to join till market what take out this very high. Till market take out this very high. So we always look to join the buy. This is our general idea of structure. We always look to what? To join the buy. This is our general idea of what? Structure. So be you intraday trader or a scalper. So once you're able to know what market will do, that it will be buying from this area, your main idea as what a scalper should be being able to join a scalping move. You as a swing trader, same idea, being able to join the swing trades, the major move. Why scalper can decide to be what? Taking all this little sell. Why scalper can decide to be taking all this little sell that is within it. That is their what? That is their own work. But you don't care about those little sell. Your major idea is joining till market take out this what? This very high. This is how you what? You trade your what? Your setup. And this is how you what? You understand your structure. This is how you what? You understand your structure and plan your what? Your trade. This is how you what? You understand your structure and you what? Plan your trade. So that is that about structure. That is that about structure. So if we have any other question, you can ask now before we go into the video. That's the reason why we have class now. So if you have any other question, you can ask now based on structure.
Yeah, boss. I have one more question. I was asking you about this topic that you explained now about the minor structure and the fake and real BMS. I want you to clarify once more. So if we are getting a pullback inside our regional range, or for example, a daily structure, and it is not deep enough, then it's a shallow corrective wave, yeah? And if we get it deep enough to clear most of the minor liquidity, it's a deep corrective wave, yes?
Yeah.
So, and if we, for example, get our minor BMS inside our main range,
Yeah.
I mean, price coming. Okay. I mean, price coming from the range structure inside the.
Excuse me, bro. Excuse me. So if you're not asking question, please you mute yourself. You mute yourself. If you're not asking any question at all, you mute yourself. So continue, bro.
Yeah, I mean, so we do have range structure, for example, and price is coming from the range structure and make a minor breaker structure inside the original structure range. In this case, only in this case, we expect a deep pullback, deep corrective wave, yeah?
Yeah.
And if price, for example, breaks the range structure minor BMS, but not coming deep inside our regional range, it's a shallow corrective wave, yes?
Yes. Yes.
Okay, thank you. That was my question.
So that is that about shallow and deep corrective wave. That is that. So a minute. Okay. Welcome to today's meeting. So today we'll be talking about liquidity. So we have idea of how liquidity works. So we compare them together. Now we have our major range based on structure. our major range. Now let's take, for example, higher high, higher low, 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 higher high, a low and low. Now let's take, for example, from this structure, this is our lower low, former lower low. This is our lower high. This is our new lower low. So we expect market now to create a lower high and our lower low. Now, this is our idea of structure. This is our idea of structure. Now, if now market broke this area as a minor BMS, minor break of structure, telling us that we are going to seek for external liquidity. Telling us that we are going to seek for external liquidity, minor break of structure. As market has given us this minor break of structure, this first high that gave us first retracement after market broke this MOBOS, minor break of structure, before taking out this external liquidity. Now, as market is coming back into the zone, we call this high liquidity. We call this high liquidity. We call this high what? Liquidity. So this is normal idea of liquidity grab we have been talking about. So when market grab this first liquidity, we do call it what? Liquidity grab, where market gives the first BMS. That does not mean that market cannot get to this area and sell off. Market can do that, but we'll explain that later. Now we are doing everything step by step. We are doing everything step by step. So as market gives us this first BMS, after first BMS, the first leg that gives us a pullback, we do consider that first leg as what? Liquidity. We do consider that first leg as liquidity. So this is the general idea of our liquidity. This is the general idea of what? Our liquidity. Now, let's take another case study of some things that happen. Now, this is Euro USD. This is Euro USD. Now, the idea of structure and how market builds liquidity. The idea of structure and how market builds liquidity. Now, let's use another pair, since this is the pair that I do trade, so that at least you understand what we are saying. Or we can use a different pair. Let's use GPB, JPY. So we use GPB, JPY. Now, let's take, for example, on weekly time frame, on this GJ, on weekly time frame, you'll notice around this area, market was giving us a higher high, and formally, let's use a 3 days time frame. So formally, you will understand the structural range around this area. This being our lower low, our lower low, lower high, lower low, lower high, lower low, lower high, as our structural range. Use something else. Now you understand that this is our structural range around this area. Based on this time frame. Now, after that, we had a lower low. This is what we have on this time frame. This is what we have. This is what we have on this time frame. Note this one did not break this high. You didn't break that high. Okay. Yes. Okay. Yeah. So now you understand that this is our structure range. Lower low, lower high, lower low, lower high, a lower low, a lower high, a lower low, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. This is the structure that is formed on this 3 hours time, this 3 days time frame, on this GJ. On this GJ. Now you will understand that around this area we have what we call range structure. We have what we call a range structure. Before market give us what? A corrective move to the upside into the former range, then created a new lower low. So this is the general idea of how you would understand your structure. Now, after understanding your structure, now we are not going to lower time frame. When market was giving us corrective wave into this former range, you know, this was the, let's say, for example, this was the last area we have a break of structure to the downside, a trending market. Now, let's take, for example, this is where market gives us what? A break of structure. Now, as market gives us this break of structure around this area, now we will learn about mitigation also, but not today. But it's very important in what we do in this mentorship. Mitigation, the core idea of mitigation. Now, as market has given us this, now you'll notice that this is where market gives us what? A BMS to the upside. See, look at that trend line reversal move that I was saying before. A trend line reversal move. So market will now trap SMT traders. They will think that this is what? A double bottom. They will be calling this a double bottom. So once they see that, once smart money or the market makers see that this is what smart these are what smart money or retailer traders are saying, now they always try to trade against them in terms of what? Liquidity. Now they give us what? A minor break of structure. This is only a minor break of structure. This does not mean that we start seeking for this high to break this high. This is only a minor break of structure in terms of range structure, which we have talked about since we start dealing with structure, range structure and all. So since this is our range structure BMS, not major BMS, because this is the last structure range we have here. This is our last structure range we have here. Lower low, lower high. Then a lower low was formed. Now, as market is now giving us a corrective move into this range, on this time frame, this is a big wick. So the time frame it become candle. We'll learn that when we're talking about our point of interest. Can be what the time frame we can call it SC. But if you are calling it SC now, if you are calling it a sponsored candle based on structure, the whole of this candle is a sponsored candle. And on this time frame, this can be more than 1,000 or let's check. This is up to approximately 3,000 pips, 2,745 pips. So you can't say that this is your SC. How would you trade it if this is your SC? So we don't use that SC like that. So when this type of market situation or market presentation happen, that's how we do what? Shorten our stop loss, even to the smallest ratio. So now around this area, you will understand that this is now our structure range. Market now give us BMS, higher high, higher low, a higher high, a higher low, a higher high, a higher low, a higher high. This is the structure around this area. So that means this is our higher high, higher low, higher high, higher low, higher high, higher low, higher high. Before market gave us what? A lower low. So this is what we call what? A minor break or structure. MOBOS. This is our what? Minor break or structure. You understand that what market provided here is complete mitigation. Market did not give them. There's nothing like a liquidity void. Now, if you don't know the liquidity void, don't disturb yourself. We'll talk about it. I will teach that later. So liquidity void simply means when market is giving more sellers candles. Let's take, for example, here. There's full sellers power here without buyers being present. Without buyers being present. So market now give this as what? Liquidity void. Only one side of the market. Only one side of the market was in charge on that time frame. Only one side of the market. The other side, either buyers or sellers did not show their sign around that area. We call it liquidity void. When we have up to strong bullish candle, let's say up to 3 bullish candle, if it's at least big enough without weak touching each other, when it's big enough, we do call it 3 of them big enough, even if it's not even big. As far as we have up to 3 candles without touching, without buyers candles, we call it what? Liquidity void. Now let's take, for example, this one candle here as our SC, at least this one that we would have called SC, but we can't call it SC because it's too big here. So we can't do that. But it's still our SC based on what we know now. It's still our SC. So this our SC here is what we call liquidity void. Why? Because there's so much power on the sell side. There's so much momentum. We have talked about momentum. There's so much momentum in this candle. So this is what we call liquidity void. So market now came to what? Fill that liquidity void. Market came to fill the liquidity void. Market filled the liquidity void. So that is what we call liquidity void. Now this little buy move here that happened is a corrective wave. This buy that you are seeing here is a corrective wave. The major range is to the downside. The major range is to the what? Downside. The major range is to the what? Downside. We teach you everything, even when market will break structure high. Let's take, for example, when market will break this high. From this area, you will know that it will break this high as a BMS. So you will start looking for buy around all this area, even when it will do that. If it will not do that, you will still what? Understand it with time. So now, based on what we are learning, now we are completely on downtrend on this time frame. So because we are on downtrend, we don't change bias easily. We stick to what market is what giving us. It is not what over till what it is over. So you stick to what you know. That is that. So this little buy move here is what? Corrective wave. And this higher high, higher low, higher high, higher low, higher low that you are seeing here is what we call minor corrective wave. Or is what we call minor structure. I meant to say, sorry, not minor corrective wave. It's what we call minor structure. These little buys that you are seeing here, this higher high, higher low, higher low, we are seeing here is what we call minor structure. Why? When price was selling here within this one strong candle, we call it what? Internal structure before breaking this low. When it was creating lower low, let's say on 15 minutes time frame or 1 hour time frame, when it was creating lower low, lower high, lower before breaking this low, we call it internal structure. Same thing applies to this area. So as market was giving us sell move here, a lower low, lower high, lower low, lower high, lower low, lower high, lower low, a lower high, last lower high created before a lower low. These are called internal structure. So as market broke this high now, despite the fact that this high was quite high, at least the gap between this high and this recent high is not far. But if, for example, it's far to this high, you know that in terms of structure, you're not expecting market to take this high. In terms of structure, you're not expecting market to take this high. But this is our internal structure. So based on this internal structure, because market has now broke internal structure here as a BMS, minor BMS around this area. So since market broke this minor structure, all this will become a what? Liquidity graph. All this high will become what? Liquidity graph. Where market will start giving us what? The first BMS. And you must make sure you understand the structure around this area so that you'll not be calling this a BMS here. Based on this time frame, you must understand what market is doing. You must understand the structure range around this area so that you'll not be calling this a minor BMS. This is where we have the minor BMS, not this area. Not this area. So around this area, market was using the lower time frame of the structure range, or the internal structure plus external plus range structure to form liquidity around this area. That is what market is doing. If you understand that clearly. So that is what market is doing. So these highs that you are seeing here, we do consider them as what? Liquidity. These highs you are seeing here, we do consider them what? A liquidity. Now, if after market has not grabbed liquidity, if market now create a lower low from this area, create a lower low, this simply means this has not become what? A strong high. This high has now become what? A strong high. So it is in line with these highs. That means that high there is what? Our major liquidity, because it has what? Grab internal liquidity. So that means it has given us what we call liquidity grab. That means it has given us what we call liquidity grab, the lower highs. That's what I'm marking out now. The lower highs. So you understand structure completely. You understand what? Structure completely. You must be able to understand structure completely. So this is what we call a lower high. So if market now, for example, market now create a lower low from here, this is what we call a major liquidity. Why? Because what? It has grabbed internal structures. It has grabbed internal structures. So we call it a major liquidity, which is what? Liquidity grab, as characteristics of what? Major liquidity. As what? Characteristics of what? Major liquidity. So this is how market forms. This is how market works. So that is all for today. From our last class, we talk about how to use double bottom as liquidity, market within a range. So if market is now coming inside a range, you see where market form a double top. Most times, those double tops act as what? Liquidity. So maybe from our next class, we see more example about that. So that is that for today. So I think now with this one that we have learned now, we are able to watch perfect structure. So we'll be moving deeply in what? Liquidity. Just like I said in our last class, I said we teach what? Inducement. So this is what? Some part of what? The inducement what? Class, which will be what? Learning the true what, or the main core of what? Inducement in our next class. So that is that. Remain as you were. So good luck and happy weekend.
Boss, I'm sorry, can I ask you one more question?
Okay. With your question that you asked now. So your question is, after market broke this high, why do we consider all this as liquidity? Now, just like I said, after market give us minor break of structure, And you must be able to define the structure around this area in this little corrective wave here, in this corrective wave here. So once you're able to define it perfectly, where we do have this minor break of structure, if market give us a BMS to the upside here as minor break of structure, that is internal break of structure here. So when market give us this internal break of structure, or you can call it minor break of structure, anything that you like, you can call it that. But we do call it minor break of structure. But it's internal structure break. So because it broke this internal structure high, because it's still within this former range. So when market break this high, when it is mitigated, when all zone is mitigated, that means there's no liquidity void. There's no liquidity void. So when it is mitigated, we do expect price. We do expect price what to clear all internal structure, to clear all. Since it has broke this, when this area is mitigated, we expect market to clear all. When we're talking about deep curve inducement, so if it will know what clear all, when there's some model the market will form around this area, then we tell you what market will do. So because this area is mitigated already, why? After BMS, RQ, BMS, RQ, BMS, RQ. So there's nothing like liquidity void or market giving a sharp gap after this low was created. It gave a down move, create a little corrective wave around this area. A down move, a little corrective wave, then create a lower low. This is, all right. This area, from this area, you understand that the internal structure within this range is not balanced. This one and this one did not mitigate each other, or they did not touch well. They did not give a deep corrective wave within them. The reason why market will form this, we still teach it. Understand that. The reason why our market will form this type of move, get into this area and give a sell move, we still teach that. But that cannot be understood with structure based on what we have learned so far. I'm not saying others cannot take it, others can trade it, but based on what we have learned so far, we have not yet explained that. So when market is giving this deep corrective wave around this area, that's what we call a little idea of what we call mitigation. That is a little idea of what mitigation. Before we go, before we teach the core idea of what mitigation. So that is what we call mitigation. Both of them that are giving what a deep move to the former range. They are giving a deep move. BMS a deep move to the former range. BMS a deep move to the former range. BMS a deep move to the former range. But you already know your external liquidity. What is giving what a deep move to the former range is giving what a deep move to the former range. That's how market do from it. So that is what we call what mitigation. So if market has mitigate all, so when market break this high, you expect it to clear all without what taking out what your major structure. So that is our what, that is your what the question. That is the answer to your question, bro. So do you understand?
Thank you very much, boss. Yeah. I think I understood this part.
Okay.
But please, can you please give some advice to me? I get sometimes a bit confused about the minor structure. In case, I mean, the minor structure range may be like very small. I mean, price up to BMS may give a very slight pullback and then continue structure. And how to understand if the price, when coming back, will go deep enough, or it will submit to lower time frame structure with this super low. Super low retracement.
Okay.
I don't know if you understand me.
Okay, that is what I'm saying. Just like I said, we have short period now to finish the mentorship. Okay, so after the mentorship, you understand everything about price. Believe me. So that is what I said. What I always said now is try and be understanding what you are teaching. Then when those things that I taught you present themselves on chart, you'll be able to understand what they are doing. The rest that you don't know yet, you don't disturb yourself about them. Okay. So that is what you have to do.
Thank you.
Yeah, that's what you have to do. Yeah. That is it. So we can't teach you everything once, like that everything once. No, I don't do that. So we take time doing everything gradual, as what a gradual process. So we are learning everything gradually till we master all. So what we will not like treat more in this mentorship, though others we do teach them that psychology aspect. But once after understanding all this everything about market, then in our weekly commentary, so you'll be learning about psychology and other stuffs. So that is it. So I just eliminate psychology in the mentorship. That's that, bro.
Thank you very much, boss. Appreciate it.
Welcome, bro. And also, like I said, you can be following Mark Douglas on YouTube for more psychological videos and stuffs, more wisdom about that or knowledge. Okay, so you have to do that. Be following the guy and
Yes, thank you.
other people that do teach about psychology mostly. You can still be following those people. So that's that, bro. Okay. So take care, bro.
Thank you. Goodbye, boss.
Okay. So I believe there's no other question from anyone.
There is. I sent one to the chat box. I don't know if you saw it.
What?
I sent them. I sent a question. Is in the chat box. Okay. You now deleted the. So you remember the side you said is not the real break of market structure, like, because it's get confusing for me most of the times, like, trying to get higher high, higher low. So is there like any advice you could tell, like, this is, you would invalidate this is the right one, this is not the right one? I don't know if you can remember where you said, we shouldn't use that as a real. That would be like where the 2018 is on the chat, like just up, there was a place you were like, it's not the real.
Okay, here.
Yes. Why did you invalidate that? Like, it's really whenever I look at chats, it's very hard. Like getting
yeah. I got that clearly, bro. I got that clearly.
Thank you very much.
So welcome, bro. So now listen good. So here now around this area you have, this is the high that we are talking about here. Around this area we have a BMS to the upside, right? Clearly. Now we have a BMS, higher high, higher low. A higher high was created, a lower low was created. Now, people would have called this a BMS. People would have called this a BMS. Now, this is the idea of the major inducement that we'll be learning. So, for this area, structure cannot perfect this. Structure don't have hand here. So, based on what I know already, so I'm not saying that other people cannot use structure to explain that, but for me, I don't know how to explain this with structure. So that's why we are taking it one after the other. After structure, liquidity. So now after that, what market use here around this area is, now in terms of structure. Now let me explain in terms of structure. What market use here is this. Now after market run into this former zone, the higher of this former zone, let's say around this area, then give us a minor break of structure here, a minor break of structure, because this area we have a minor break of structure when market was selling here, when market was selling, created a lower low, lower high, a lower low. The market now created a higher high. So this area we have a minor break of structure, a minor break of structure. A minor break of structure in terms of structure. Now, since market has now giving us this minor break of structure, market give us a higher low, a higher low. That means this is where market give us the first BMS. So if market would have buy again, market can form all these things that it formed here and give us a higher low around this area, weak through this low, based on what we learned today. Now, weak through this low without closing below this last one here. Weak through this low, use it to create either double bottom or something, then create a higher high. That means market can do this. And if we do this, people that call this a BMS will be confused again. That's why we are taking time to teach it. Now, what market used was this. After BMS of this external structure reach high, market create a high. This is internal structure. So this area, this now after this BMS, higher high, higher low is internal structure. This higher high and higher low is internal structure. That is within the range, structure within the range. This is where market show that it will take out this high. So after it broke this high, it showed that it will take out this high. So this is internal structure. What you are seeing here is what? Internal structure. So since market has given out internal structure, after BMS of a high, it broke these two of them together. So it created a higher high, a higher low. This first higher high, higher low is a range structure in terms of structure now. So let's make it clear in terms of structure without liquidity now. But maybe with structure, maybe you cannot expect it to happen like that. But with liquidity, you will understand it, or you understand why it will form like that. Now, it creates a higher high in terms of structure. Now, higher high, higher low, outside of the range. That means this is a what? A range structure. A range structure. So since this is a range structure, it did not grab any internal liquidity. There's no internal liquidity around this area. Based on this time frame, there's no internal liquidity. So it creates a higher high, higher low. It's a range structure. Create a higher high again. Now a lower low. That means market now what? Read this range structure. This range structure low. So that means the internal structure, market still use the internal structure to continue. That means based on the internal structure, a higher high, a higher low, a higher high, a higher low, a higher high, a higher low was created, a higher high based on the internal structure. So if we break down the first one here, apart from being a higher time frame structure range and being at a point of interest, apart from that, now if we broke this area, that means you are expecting market now to clear up to this extent before buying. That means you're expecting market now to clear up to this extent before buying, or at least clear all this range structure. So market now create this first one here as range structure of this minor BMS here. Then why this one as the range structure of this normal high? So that's what market did here. That's what market did here. So this is minor BMS of this range. So this, what happened here, this area is minor BMS of this range. This area is minor BMS of this range. So when market do this, if let's say the order flow of that pair is still bullish, without getting to the, let's say, what is happening on the left-hand side, point of interest on the left-hand side, without getting to that, let's say there's nothing there. So we are still bullish. Market can decide to create this, expect a lower low around this area, then create a higher high from this area. Just wick through this low with either 1 pips or 2 pips. It's not compulsory that it will wick it up to 3 pips, because this one here is very close to this low. So if market is coming to wick through it, it will not wick through it more than, let's say, it will not wick through it more than, let's say, 1 pips or thereabouts, because it's very, very close. This one and this one is very, very close. So market can use it to form another double or triple bottom, but it's still what in line with structure. So market has not yet violated the rule of structure yet. Market has not yet violated the rule of structure yet. So this is how you define it. Within this, if this is higher high, higher low, you are trading within this area. This is the area you're trading. This is the area you're trading. The same time, if this is the area you're trading, or you are on lower time frame, this will become your major. Let's say you are intraday trader. If you go to 1 hour time frame, this area, this will become your major high. This will become your major low. But you already know your higher time frame major high and major low. So why this one on lower time frame, intraday time frame, it can become a major high and major low on that intraday time frame. Just like as we saw, if we go to monthly time frame again, we will still have a major high and major low. That all these ones are within. So that is how you frame your setup. That's how you frame your setup, and that's how you frame your liquidity. That's how you frame your liquidity. So that is that. So if it's clear in your eye now, you let me know. If it's not clear, do let me know.
So So again, boss, we do not. I mean, we expect.
Okay, excuse me, excuse me, excuse me. Are you the guy that asked the question first? No.
No, it was me that asked it.
Wait. Then, yeah. Okay, bro. Now, is it clear or not clear?
I wouldn't say it's clear, but I'll go over the chat after the I'll go over a chat after the class and see if I could piece it together. But now, at least
Okay.
the additional knowledge which I can understand is you wouldn't, because I remember before you said you wouldn't add range structure when it's gonna change direction. So if that's a range structure, then totally it doesn't mean it's not valid. So it wouldn't be a BMS to the downside from
Yes.
yes. So
Yeah.
I'll just go via charts too. I don't know if you could probably make it like an assignment, like you tell everybody, or I
Okay,
would
yeah.
personally create up charts and mark it and send to you on DM to see.
Yeah. That
Probably
I
go.
do. Okay, I understand you, bro. I do that before. I do give assignment before. So I do give the assignment before. The major reason I haven't like started giving assignment is I just wanted to like give you teach you people about liquidity first, and then I'll be giving you assignment. That's just the major thing. So, but I'll be giving I'll give assignment based on this. Based on this, I'll give assignment on this. Now after that, but after liquidity, once we are done with liquidity, not point of interest. Once we are done with liquidity, I'll be giving assignment because I believe by then at least some things will be clear in your eyes. So with that, I'll be giving pure assignment that everyone will be doing. Like that.
Thank you very much. Thank you very much. I appreciate it.
Welcome, bro. So take care, bro. Okay, the other guy that was trying to ask question. So what is your question?
Yes, boss. I was asking you to clarify one more time. So we do not expect the price initially to. I mean, we expect the price to buy, for example, at the low of our initial major structure range, because price initially didn't make a decorative wave.
Yeah.
I understood you right? Yeah.
Yeah.
It was all minor structure.
Yeah.
Okay. Thank you.